Let's open up this indicator. So what we do is that we head up to the indicators tab in TradingView. And now what we want to search for is money flow index, just like this, money flow index. And once again, we have multiple different versions created by the TradingView community. But we just want to use the standard money flow index created by TradingView. So make sure to choose this one at the top right here. So now, as you can see, an indicator has appeared here on the chart. If you are familiar with TradingView indicators, this one pretty much looks like an RSI. We have an indicator here that oscillates, or in other words, moves up and down between a value of 100, which is up here, and 0, which is down here. But now you might of course wonder, what does the money flow index tell us about the price? Well, as we can hear on the name money flow, it basically indicates how the money flows. So are the money flowing from the buyers or from the sellers? But to be more precise here, the money flow index is an indicator that combines two things. It combines price and volume. So the money flow index tend to move in the same direction as the price. So for example, right here, the price is moving up. So if the price is moving up, the money flow index tends to also go up. But the money flow index also uses volume. So when we see an upwards price movement, like for example right here, and if we also see lots of volume, this will lead to stronger upwards movements on the price. And once again here, you can see here we had a downwards movement and we also had lots of volume. This will lead to sharper decreases on the money flow index. So it's basically, like a combination of price and volume, and the volume makes the indicator move either, faster or slower. So it's basically volume multiplied by price. It's a bit more complicated, but I won't go into detail into the exact calculation here. But now let's actually change a few settings. So let's go down here to the bottom left corner and let's press on the settings tab right here. Just the first thing I want to do here is that we are on the styles tab and I want to make the line a bit more thicker, just so you guys can see it more clearly. And the first thing we can notice here is that we actually, just as with, for example, the RSI indicator, we have an overbought and oversold area. And the overbought area is actually 80 and above, and the oversold area is 20 and below. If I once again compare with the RSI indicator, for the RSI, the overbought is 70 and above, and the oversold is 30 and below. But for the MFI, we have 80 and 20. It's basically based on how the indicator is calculated and so on and so on. But you can also, of course, you can change these values, but I do recommend to keep them as they are. You could actually also, this is something you could do, you could even uncheck these ones, because I'm not a very big fan of the overbought and oversold for the MFI, but I will talk about that more later. And as with the inputs here, we can see that the standard is 14. Of course, this one is you can definitely change, but because most of indicators have the standard of 14 for this video, let's just keep it at 14, keep it simple. So I'm not going to change so many settings here. I think I'm just going to press OK here. But now, so there are basically two main use cases, at least that I know of, that traders use the MFI. The first one, as I talked about, is to use it as an overbought and oversold indication. So the theory goes that when the MFI is above 80 here, that it means that it's overbought and it suggests a potential reversal to the downside. The opposite is true for the oversold. When the MFI is below 20, like right here, it suggests that the price is oversold and that we are, a potential reversal is likely. However, I don't really like this method and I don't see too much value of it. For example, let's just take a look at this point right here. Here, the price is overbought. But if we look at what actually happened to the price, what happened to the price? Well, after this point, the price just continued higher and higher. So if you would have shorted the price right there, you would have definitely lost some money. However, in my opinion, a better way to use this indicator is to look for divergences. And what are divergences? Well, that is when we have the price going in one direction, like for example right here, and the indicator going in the opposite direction. So in this case, we have the price printing higher highs, while the indicator clearly goes in the opposite direction. This right here is what we call a bearish divergence and actually indicates a potential reversal to the downside. So why does this indicate a potential reversal to the downside? Well, the price is moving up, but the money flow from the bulls, the bullish money flow, is going down. So in other words, even though the price is going down, we can see that the volume here is decreasing, and this will lead to the money flow also decreasing here in relative terms. And remember, when the price is going up but the volume is decreasing, that means that less and less buyers are supporting the move, and that is an indication of a potential reversal to the downside. But here you could, for example, say, can't we just look at the volume indicator? So here we have the price going up and we can clearly see that the volume is going down. Well, that's definitely one use case. Many traders only use the volume indicator, but if you are going to use the MFI, I would, probably not use this one as overbought and oversold. I don't think that makes a lot of sense. I definitely do think a better option is to look out for divergence. This video was actually just a very, very short clip from our full volume trading course here on the channel. You can watch the full course for free by clicking or tapping on the screen right here. I hope I'll see you all over there very soon, but for now, take care. Ciao, ciao.